Hi there, this is Bruno from Spainguru.es, and this is the free Spanish taxes overview webinar. Today is Tuesday, July 15th, 2025, and we're going to be starting right now. A little bit about Spainguru. Our objective is facilitating relocation process for English-speaking foreigners to Spain since 2014. You can see we have some great reviews out there, so you are in very good hands. You can use Spainguru.es for absolutely free. We have a weekly newsletter every single Monday where we feature the top discussions on Spainguru's Facebook groups and Reddits, etc., and also investigation articles, most watch videos, etc. You can also watch for free our YouTube channel with almost 1,000 videos, read our blog posts, almost 1,800 articles, and of course, as I said, join our Facebook group with an aggregated total 150,000 members. So you have several groups out there. You can watch our webinars. All of them are free. You get a free recording after you have registered. You have no lucrative visa, Spanish taxes, move to Spain, digital nomad visa, Portugal golden visa, Q&A session for no lucrative visa. And recently, I have developed a move to Spain checklist section on Spainguru's homepage. If you just go to Spainguru.es and scroll down, you will find move to Spain checklist, and you can see, if you push the button, that you have a timeline that starts 1 year before your intended date to move to Spain. And once you click on the different stages, you will see all the different milestones that, in my opinion, you need to pay attention to, and of course, resources for you to basically move to Spain successfully and smoothly without so much stress. But of course, if you need professional advice, I have personally vetted my partners. I have been working with them for several years. They only have great reviews. You can find immigration experts, of course, tax advisors and financial planners. And if you plan to apply for visas, NLV compliant or any Spanish visa compliant health insurance, medical certificates from translation and postal services, and many more services such as bank accounts, money transfer services, property rentals, even mortgages if you plan to purchase property in Spain, and so much more. I highly recommend you going on Spainguru.es and spend at least a few minutes. Click on the services top menu, and you will see that there's so much stuff. You can find discounts as well, referral codes, and so much more. Now, a little disclaimer here. This presentation and webinar is for general information only, and it's not legal, financial, or tax advice. For professional guidance or personal guidance, consult with a qualified advisor, which I am not. Find the trusted experts on Spainguru.es. Spainguru is not liable for errors or outcomes from using this information. But at the very least, I hope that you get out these 4 objectives or things from this webinar. First, I hope that you gain an overview of Spanish taxes and you understand the key tax categories in Spain and learn the basic principles of taxation in this country. Prepare for informed conversations with tax advisors so that you engage more effectively with tax professionals when you speak with them. Sometimes when you engage with professionals, it seems that we speak different languages, all right? But now I hope that after this webinar, you will communicate more effectively and you will be able to ask more precise and informed questions. Also, it's important to clarify the role of a professional tax advice, and hopefully you will understand that this webinar will only provide general information and will never replace personalized tax advice, and recognize how individual circumstances can significantly impact tax liabilities, your circumstances, where you move in Spain, and so much more. And last but not least, I hope that you will identify key considerations and you learn about potential tax implications for, especially the focus is in US and UK nationals considering moving to Spain. But I would say that 99% of the content in this webinar applies to everyone else, every foreigner that plans to move to Spain. And hopefully you will be aware of compliance requirements and deadlines to avoid potential penalties. So all that I hope you will get out from this webinar. Spanish tax residency, okay? Probably the most important concept. You become a tax resident in Spain and must pay tax on global income if any of following apply. And not only global income, but also potentially on the net value of your assets and rights held abroad and inside Spain. First condition, and any of these conditions separately, okay? You spend over 183 days in Spain within a calendar year. Tax year in Spain starts on January 1st and ends on December 31st. The days spent in Spain don't need to be consecutive to count. And it doesn't matter your immigration status. That means that, for example, if you enter at the beginning of the year as a tourist and then you get a Spanish visa and residence at the end of the year, both stays count and they add up for this. So it is important that you count every physical presence in Spain towards this calculation. Then there are two other conditions. Second, your main economic activity or primary income source is in Spain, regardless of the time spent in the country. And the third one is if you have family living in Spain, your spouse and minor children are residents in Spain, you could also be deemed to be tax resident in Spain. Therefore, if you're planning to move to Spain and if you move after July 2nd, okay, and you haven't been previously during the year, you can only spend 182 days left in the year, in the calendar year. Therefore, you can't become Spanish tax resident during that specific tax years. Therefore, it's important that you verify your travel records. Yes, and remember, every single time you've been in Spain, even as a tourist, maybe doing a scouting trip, all those days count. So be careful with that. Okay, as I said, the consequences of being a tax resident in Spain, you will be subject to taxation on worldwide income and assets, potentially, depending on the thresholds of your wealth. And if you are a non-tax resident, you will pay taxes only for the income and assets sourced from or located in Spain. Okay, talking about non-residents, it will depend whether you are an EU passport holder or a non-EU passport holder. EU passport holders, they have a flat rate of 19% generally for income sourced in Spain, okay? And non-EU passport holders have a higher tax at around 24% for the most common types of income. For example, rental income. If you own a property and you're a not Spanish tax resident and you generate rental income from a Spanish property, you will pay 24% income tax on that income. Now, let's talk about the tax systems and obligations in Spain, also known as regimes. We have two, general tax regime and special tax regime, also known as Beckham law. Let's start by the general tax regime. It includes the income tax, personal income tax, okay? Or IRPF, Impuesto sobre la Renta de las Personas Físicas. Then there is the wealth tax, okay? Impuesto sobre el Patrimonio, which is a tax on the net value of your assets and rights. Solidarity tax, which is more or less the same as wealth tax, but it's a national tax, whereas the wealth tax is a regional tax, okay? But it kicks in at a higher threshold. And then there is the 720 informative form for declaring overseas assets, okay? So the 720 informative form, it's just a declaration, it's a statement. You don't pay taxes proper, but you disclose what are the assets that you own outside of Spain, and assets and rights as well. Okay, for example, cryptocurrency. Now, well, cryptocurrency is also assets, but you know what I mean. Now, the special tax regime, there is the Beckham law. And first of all, eligibility, because many people think that can be eligible just by moving to Spain, but it is only at very specific situations, such as relocation to Spain for work purposes. So 99.9% of cases of eligibility for the special tax regime, Beckham law, is for employees working for non-Spanish companies who are relocated to Spain. Therefore, contractors, autonomous freelancers usually are not eligible for this special tax regime. The advantages, there are pros and cons. The advantages, the famous flat 24% tax rate, okay? That applies to employment income generated in Spain. You don't pay tax on your income generated abroad, okay? And you don't have to file for wealth tax, and you are not required to submit the 720 form, for example. But there are some cons, and due to these cons, tax advisors would recommend not applying for the Beckham law if you are making less than about 60,000 euros of taxable income, because there are additional administrative burden that may outweigh the benefits, and you are not eligible, for example, for family deductions and allowances and several other things. So therefore, if you're making about 55K to 60K taxable income per year, it may be more beneficial to stay under the general tax regime, okay? Now, the first tax obligation, we mentioned the 720 form. This is the overseas assets reporting form, all right, where you declare that you own assets and rights held abroad, outside of Spain. And this is done by categories. For example, bank accounts, investment, real estate, recently cryptocurrencies via the 721 form. Now, these categories okay, have a threshold of 50,000 euros of value, right? So, for example, bank accounts category, if you have 10 bank accounts with 5,000 euros, the total of the bank account category will be 50,000 euros. Therefore, you need to declare the existence of every single bank account that you have outside of Spain, because the category it's over 50,000 euros. To give you an example, right? Now, when you become a tax resident in Spain, you have a first year requirement to disclose fully all your overseas assets over this threshold. And especially the tax authorities want to know this. They want to know the existence of these assets, potentially for deeming you liable for wealth tax or solidarity tax, and potentially for personal income tax, as they may deduct that if you hold properties abroad, maybe you are renting them out. So yes, this is why the authorities want to know what you have outside of Spain. Now, subsequent years, if you stay longer in Spain, you don't have to file the 720 form every single year unless the report, there are changes of over 20,000 euros per category, or assets closures, okay? The deadlines, the submission is March 31st, following the first year of tax residency. And normally, if you work with a gestor or tax advisor, you will begin preparing this form on January 1st, okay? Of course, the first time that you disclose the assets, you will have to also submit documentation where you show the existence of the different assets that you have abroad, like bank statements and details about your properties abroad, etc., etc. Okay. Second tax obligation, income tax, right? So this is probably the most famous or most important one. And before I continue, remember that you can ask any question in the chat box in the bottom right corner of your screen. Make sure to add a question mark at the end. And after the presentation, I will go through the Q&As, and I will hopefully going to answer those questions, okay? So remember to do that if you want to ask your questions. I can't stop, let's say, the presentation for answering the different questions, but I will go through them at the end of it. Now, let's continue. Second tax obligation, the income tax filing, right? So you have different types of taxable incomes. First, you have ordinary income, okay, that are subject to progressive tax rates that range from 19% to 47%. And within the ordinary income, you have salaries, rental income, and business earnings. Now, you have also, apart from ordinary income, you have investment income. Within this type of income, you have dividends, interest, capital gains tax, which are taxed at lower rates that range from 19% to 30%. We're going to see how we calculate those progressive rates, but it's important to understand that investment income is taxed at lower rates than ordinary income. The deadlines to file the annual income tax, is June 30th, okay? So for example, on June 30th, 2026, we will file our income in 2025, okay? And normally the preparation begins on April 1st. However, if you are autonomo, okay, which is a freelancer or contractor, here paying taxes in Spain as a freelancer, okay, or also known as autónomo here in Spanish, you will have to also file quarterly filings of your income tax, paying taxes, like let's say advancing normally a 20% income tax, okay? And then when you do, you will pay every single quarter that income tax. And then when you do the annual submission of your income tax, you will either pay the difference, or Hacienda or the Spanish IRS will pay you back if you paid too much, which is not usual, okay? Because 20% is on the lower end of the progressive tax rates, and you will be usually higher effective tax rate than that. So you will still have to pay something, but you will not have to pay everything at once, let's say, because you would have already advanced 20% every single quarter. But you need to be keeping a very organized and structured filing of the taxes every quarter, okay, as an autonomo. By the way, I'm an autonomo here in Spain, so I have to do this, and I use a gestor because it is a huge headache. Now, talking about US citizens, you must, of course, continue to file taxes in the US just because you hold the US passport. And normally, 15th of April is the time in which you need to file your income taxes. And if you live overseas, you get an automatic extension to file your income taxes until June 15th. This is the first extension that you get automatically. And also, if you need, you can also request to extend further up. But normally, you would pay your Spanish taxes. If you're a Spanish tax resident, you would pay your Spanish taxes in Spain, and then you will credit what you paid to Spain towards your US taxation or filing. Okay, so therefore, due to the double taxation agreement, you will not pay twice on the same categories. It doesn't mean that you will pay less taxes, but you will at least not pay twice tax in the same category. For example, income tax. Okay, so this is the way it normally works. There are some discussions among people whether it is better to file first in the US and then file in Spain. But I would say that normally, generally, tax advisors that are familiar with US and working with US nationals, this is the way that they normally work. Okay. Now, frequently asked question, tax brackets. Is it true that I'll pay 45% for 100K income? And if you look to the progressive tax rates on the right, you will see that the different brackets range from 19% to 47%. And if you see the fifth bracket, you would see that income of 100K would fall into that bracket, the fifth bracket, 45%. So normally a lot of people would say like, damn, in Spain, you pay super high taxes. And it's true. We pay high taxes, but they're not so devastating high. In fact, for 100K, and this is ballpark figure, round numbers, just for illustrative purposes, so that you understand how we calculate the progressive taxation in Spain, 100K would pay an effective tax rate of around 36%. Okay? Why? Because the first 12,450 euros that you have as an income will pay 19%. The following 7,500 will pay 24%. The following 15,000 will pay 30%. Therefore, you pay sort of an average or median, okay, of those tax rates, and the effective tax rates will be lower than, let's say, that the income tax rate that where your income falls in. Okay, so you will be paying 36% for the 100K. All right, and here I have calculated for the different amount of incomes. For example, at 30,000, the effective tax rate would be around 24%. For 40K, 26. For 50, 29. For 60, 30. For 70, 32. And 100K, 36. Of course, this is for illustrative purposes only. There is no allowances here, deductions, or anything. Okay, just so that you understand how you calculate the progressive tax rates. Now, let's talk about the third tax obligation. We're talking about wealth tax and solidarity tax. Now, wealth tax is a regional tax that makes you liable to pay taxes according to the net value of your assets. As I said, it's a regional tax. Therefore, depending on where you live in Spain, the different thresholds will apply, okay? And you will calculate your net wealth as of December 31st, and you will pay this, for example, in 2025 for the net value of your assets and rights held by December 31st, 2024. All right, so depending on where you live, for example, in Catalonia, the threshold is only 500,000 euros. Okay, now Valencia recently decided to move this threshold up to 1 million, effective as of December 31st, 2025. So in a few months. Okay, and in some regions like Madrid and Andalusia, they have even higher exemptions. Okay, for example, in Madrid, they have balanced the threshold to 3 million, which is also the starting threshold of the solidarity tax, which is a nationwide wealth tax. Okay, so Madrid and Andalusia are very favorable regions if you plan to move to Spain and you have, let's say, a higher wealth. Okay, consider moving to Madrid or Andalusia. I also know that Extremadura and Cantabria are also pretty interesting, and now Valencia has gone up with their threshold. Okay, there's something called the 60% rule. Okay, which is I read it many times, this rule, and it's pretty difficult to explain it, even to understand it. But what I want you to convey to you is that if you have high wealth, okay, net wealth, but you have low income, there is a way to reduce up to 80% the wealth tax, as it will limit your tax liability to 60% of the taxable income. Okay, so this is especially designed for people who are not generating a lot of income but have high net wealth. Therefore, this is something that you need to have in mind when you engage with tax advisors if you're in this situation. Now, the deadline for filing the wealth tax is June 30th, same as the annual income tax, and you also start to prepare it on April 1st. We also mentioned the solidarity tax, which is a, let's say, quite new wealth tax created by the central government, especially to basically get taxes, especially from the provinces where, or sorry, regions where the wealth tax was 100% rebated, or they didn't apply the wealth tax, so that everybody pays at some point. The good news are that the threshold is much higher. It starts at 3 million euros, and then you will have some allowances and exemptions, and the deadline will be 1 month after the wealth tax. And whatever you pay that's a wealth tax, you can credit it towards the payment of your solidarity tax. Also, both of these taxes have progressive tax rates. That the wealth tax depends on the region, and the national solidarity tax is one single tax for the whole country, regardless of where you move. Okay. As we said, Valencia has raised the threshold to 1 million, effective as of December 31st, 2025. And this is very interesting because probably Valencia is one of the top areas where foreigners are moving. Okay. And also another frequently asked question is like, how do you calculate the wealth tax allowance or exemption when you apply as a married couple, right? When you move to Spain as a married couple. So that will depend on how you have your assets distributed within your couple. So for example, here in Spain and in most places, let's say in the Western world, you have two options, right? Either everyone has their own assets separately, okay, or you hold your assets as a family unit, okay? So here you have separación de bienes, okay, assets separation, or gananciales, one single family unit, okay? So depending what regime you have within your couple, they will they will calculate the net value of your assets depending on that, okay? So this is one thing I wanted to point out. Now let's continue. And here there is a case scenario where we calculate, so you understand how more or less wealth tax would work. In this example, someone who is in Catalonia, and we will calculate the wealth tax for someone living in this region and who is owner of a property that has a higher value than 300,000. As we said, Catalonia is one of the least favorable regions for this type of tax, and in general for any tax, I have to say. So the threshold, the non-taxable net value of your assets is only 500,000. So let's start with the first line of the table. If your total assets value is 1 million euros, you can, you have an exemption for 500,000 euros. And since you're a property owner of a property located in Spain, you can deduct up to 300,000 euros. Okay, so total 800,000 euros are not taxable for the wealth tax. Therefore, only 200,000 would be taxable. You apply the progressive tax rates and you will be paying about 500 euros that specific year, right? So it's not, let's say, huge. Let's say if your net assets value is 1.5 million euros, then you will pay around 3,000 euros. For 2 million, 8,000 euros. For 2.5 million, 14,000 euros. And if you are over 3 million, 3.5 million, etc., then you will have to also calculate if the solidarity tax. Okay, this is more or less how it works. Remember, there is a Q&A session at the end. Make sure to ask your questions in the chat box in the bottom right corner of your screen. Make sure to add the question mark at the end of your question so it's easy for me to see. And if you have to leave earlier, make sure to leave a review on Trustpilot. You can leave it on the top. You have a green bar with a red button that will redirect you to Trustpilot, and it will be fantastic. It will really, really help the channel to continue to grow. Thank you so much. And let's continue with the presentation. Let's talk a little bit about digital nomads. Okay, I have 3 slides here about digital nomads, and then we go back to the general public, let's say. What about taxes for digital nomads in Spain? First of all, you can move to Spain as an employee under the digital nomad visa or as a contractor, okay? In the States, employees are W-2, contractors are 1099. First slide is about employees. Now, remember that if you move to Spain as an employee, okay, and this is great news for US employees lately because they have been accepted as digital nomads, something that only happened at the very beginning in 2023, but then they were all rejected, okay, as digital nomads W-2 employees because certificate of coverage from the States was not accepted by the Spanish authorities. But lately, it has started to be accepted. So great news out there. I have recently released a video with Ainhoa Manero, expert immigration lawyer, about this. But basically, yes, employees can now move as W-2 from the US, and UK employees, they have been accepted all these, let's say, these years as well, providing an A1 certificate of coverage from Social Security. So there's basically three options to move as a digital nomad. Either you move as an employee and you provide a certificate of coverage, okay, that you pay Social Security in your country, or your company pays Social Security for you in Spain, or you convert yourself to a contractor or 1099 and you move to Spain and register as autónomo and you pay Social Security in Spain. These are the options basically, right? The interesting thing about moving to Spain as an employee is that you potentially could benefit from Beckham law with all the pros that the Beckham law special tax regime has. Okay, so this is important. However, if you move to Spain as a contractor, 1099, freelancer, and you become autonomous in Spain, there is a very, very high chance that you are not eligible for the special Beckham law or special tax regime. Okay, and if you move to Spain as an autonomous, this is also $1 million question. Like, do you need private health insurance to apply for this visa? No, you don't need, because you will, let's say, swear that you will register as an autonomous once your visa is granted. And if you become an autonomous in Spain, you have to start paying taxes in Spain plus Social Security. And Social Security includes pension and access to public healthcare system. Okay, so you will be covered by the public healthcare system in Spain. Therefore, you don't need to provide a private health insurance. This is important to notice. Now, you will be responsible for paying your own taxes and to pay Social Security in Spain. And as I said, you have to do this on a quarterly basis and also on an annual basis. And I highly recommend you at least having a gestor you can find on Spainguru.es or tax advisor, okay? At least engage for initial consultation, and potentially if you move to Spain and become an autonomo, I highly recommend you that you use a professional to file those taxes, because they can be a really a big headache. Now, this is also a common asked question. What happens if I move in the second half of the year as a digital nomad? Yes, for example, this person arrived in Spain in September, applied for the digital nomad visa in October, approved for this visa in November, okay? And since this person moved after July 2nd, 2024, this person spent less than 183 days in Spain, therefore was not a Spanish tax resident in 2024, okay? And in December 2024, registered as autonomous, right? So this person said, like, how do I pay taxes? Do I have to pay taxes for 2024, or do I have to pay taxes after when I become a Spanish tax resident? And an expert said, for, first of all, for tax questions, if you ask 10 different people, you'll get 10 answers. This is a particularly gray area as you weren't resident until you got your TA card, which is the residency card. So you weren't even officially allowed to work. But something important, you're supposed to pay tax in the country where you're physically working. So strictly speaking, on any work performed since September. So many tax advisors will say that in 2024, this person would have paid for their income generated from Spain, even if they were working remotely for a non-Spanish company, as a non-Spanish tax resident. And then the next year, they will pay as a Spanish tax resident, okay? Long story short. And if you want to know more about tax considerations for digital nomads, you can join also my webinar, which is a free bi-weekly webinar. Next one is tomorrow. You can join it anytime, and you also will receive a recording for the webinar. And you can see there's many more slides about taxation. So I go deeper into this. Now let's go back to the general public here, and let's talk about additional taxes in Spain. These are not the only taxes, okay? But these are the most common ones you will come across. First, inheritance and gift tax, impuestos sobre sucesiones y donaciones, which is a regional tax. So depending on where you move, you will have better effective tax rates, deductions, and exemptions. Okay, so it's very, very important if you're planning to receive inheritance or giving something in inheritance, or if you're planning to pass away somewhere in Spain, make sure to choose where you do it, because there's huge variations. Some regions, like for example Catalonia, are not great for this, okay, and other regions like Madrid and Andalucía are much better. Then there is the transfer tax, which is impuestos sobre transmisiones patrimoniales, or ITP, and this is the tax that you pay when you purchase property in Spain, second-hand property, okay, and it is also a regional tax, so it also depends where you move in Spain, where you buy property in Spain, you will pay starting at 6%, as low as 6%. This is Madrid, for example, Andalucía 7%, and then it will start to go higher, okay? For example, Catalonia is 10, 11%, depending on the value of the property. And if you're a company, I think you will pay up to 20%. This is very recent, okay? But it's super high in Andalucía, almost double than Madrid, which is the lowest, okay? Now, recently, Mr. Pedro Sanchez, the Prime Minister of Spain, has announced 100% transfer tax to non-European non-residents, okay? We're going to talk about that in the next slide. And if you plan to purchase property which is not secondhand, so new built property, you will pay the national reducted VAT of 10%. So normally the VAT in Spain is 21%, but there are different VATs. For example, for basic food, there is only 4%. For hotels is 10%. For buying a new property is 10%. And then you have up to 21% VAT for general things. Now, let's talk about property tax, or impuesto sobre bienes inmuebles. Now that you are an owner of a property, you will pay property tax, which is generally lower than in the USA. Usually, the calculation that I see is that you pay, let's say, in the US, you would pay 12 times the Spanish property tax. That is what you pay in Spain annually. This is what you would pay on a specific month in the US as a property tax, okay? And it is based on the cadastral value of the property, so it tends to be quite affordable. There is also the municipal capital gains tax, okay? And there are different, okay? Let's say the municipal capital gains tax versus the general capital gains tax. So you have the CGT versus the plusvalía, okay? And this is when you sell your property. In Spain, okay, in Spain, you would pay also the plusvalía. But if you sell your property anywhere else in the world, remember that you pay taxes on your worldwide income if you're a Spanish tax resident, and you will have to pay on your capital gains as let's say, as a savings type of income. All right. So I have a specific slide for this because it may be a bit confusing, but you will understand it once you see the slides. Coming back to the announcements of Mr. Prime, the Prime Minister of Spain, Mr. Sanchez, he said 100% tax for non-European Union passport holders who are non-resident in Spain should pay double the amount of transfer tax. And I have interviewed Ainhoa Manero from Stern Abogados, expert immigration lawyer, and also an expert tax lawyer, okay, Marco Gonzalez, who works tightly with Ainhoa. Okay, and they basically say that it is very, very difficult that this happens, if not impossible, because this goes against the, the foundation of European Union about movement of capitals and movement of people, and you basically cannot segregate people by these categories and have different taxes because of this. So basically, if you want to go more technical about this, watch the videos on Spainguru's YouTube channel. But long story short, it is very unlikely that this happens, and in case that it happens, it only would apply if you're a non-resident. So when you become a resident in Spain, this would not apply to you in the unlikely scenario in which this passes, okay? We mentioned capital gains tax, right? How can I avoid the Spanish capital gains tax? Many places, for example, in the USA, in certain states, you don't even pay capital gains tax when you sell your property, for example. And many people planning to move to Spain are planning to sell their property and move to Spain and start renting, even purchasing another property, right? There are ways to not paying the capital gains tax if you're older than 65, if it's your main home for the last 3 years and you reinvest all the proceeds, etc. There's ways to mitigate this tax or even avoid it. But the best way you can do is just to time the moment in which you move to Spain and the time in which you sell your home in order to not be a tax resident during the same period in which you sell your home, right? So the first example is very easy, right? Remember that tax years begin on January 1st to December 31st. So if you sell your home in December 2024 and you move to Spain in January 2025, you are not liable for capital gains tax in Spain because your sale of your home fell into the tax year of 2024, and maybe in 2025, if you become Spanish tax resident, you will be in 2025 as of January 1st, okay? Because this is how you count the tax years. Very different from immigration years that are natural years. For example, immigration year, if you move to Spain in June 2024, there is one natural year that ends in June 2025. This is the immigration year, so there are different years. The second casuistic or second thing is, for example, if you sell during the same calendar year, okay, your home, let's say that you list your home for sale in January and you sell it in March, you get your visa in April, and you move to Spain on July 2nd, that is also good because provided you haven't been a single minute in Spain before July 2nd, okay, until January 1st previously, right, because those days would count, you can only spend in Spain 182 days from July 2nd until December 31st. Therefore, you will not become a Spanish tax resident during the same calendar year in which you sold your home. Now, the effective tax, the tax brackets are also progressive for the capital gains tax, but they range from 19% to 30%. They recently raised the highest brackets for gains over 300,000 euros from 28% to 30%. This happened in January 2025. So how this is also very common to mix capital gains tax and the plusvalía municipal. Of course, the plusvalía municipal is a let's say city hall tax that will only apply if you sell a property located in Spain. So the city hall where your property in Spain that you sold will charge you also a tax. Okay, so you have capital gains tax, which is a national tax that you pay on your it's like part of your income that you generated in a certain year, and it's national. Okay, and the plusvalía is local. Okay, and the town hall will charge you a tax, right? So the first one, the CGT, is profit from the sale of the asset, and the plusvalía is the increase in land value, right? So it's a bit different, okay? But it's important that you understand that there are two different taxes, and of course, the plusvalía municipal will not apply if you sell your property abroad, outside of Spain, because it's some, let's say, a local tax that you need to have into account when you sell your property in Spain. And this is also a case scenario how you calculate your CGT, your capital gains tax. Imagine that you purchase a property for 100K, you sell it for 200, so you made a capital gain of 100K, and then you would pay the progressive tax rates. You do the calculation, and you would be paying an effective tax rate of around 22%. Okay, this is, of course, without having any deductions of agent fees, renovation, etc., etc. This is just for illustrative purposes only. Now, another thing that we're going to talk about is if you plan to retire in Spain, is your pension taxable? Many people ask this. So it's important to understand that your pension will be taxed if you're a Spanish tax resident, okay? And there are certain thresholds, but be careful, because if you're receiving your pension from abroad, those thresholds go down. So let's talk about it. First threshold, general threshold. If you only have one single income source, the threshold to pay taxes, okay, for declaring or for filing is 22,000 euros income. But if you have multiple income sources, which is very common, okay, when you get to a certain age, that threshold goes down to 12,000 euros aggregate income, and only 1,500 euros for secondary sources. Okay, so if you're over those thresholds, you need to file. And remember that pensions from abroad appear as a second payer. So even if you have one single income source, since the income is coming from abroad, it would appear as a second payer. Therefore, if you make more than 1,500 euros, you still need to file. This is how it works. Again, this is general income tax. So progressive tax rates from 19% to 47% apply. We saw the calculation. But there are double taxation agreements with most countries, including the US, UK, Canada, Australia, etc., where different type of pensions pay taxes, whereas some pensions are exempt to pay taxes in Spain. Now, if you're moving to Spain, okay, but this is, of course, bilateral agreement. So if you're from the US, Social Security and private pensions are taxable, but government pensions are exempt, okay? And the same happens in the UK. State and private pensions are taxable, but public sector pensions may be exempt. Now, there is a little note there, unless you're a dual citizen holding Spanish citizenship. So this is also a common question, and I have never met anyone in this scenario, but if you are benefiting from not paying taxes because of your public pension here, and you become a Spanish citizen, many people say that then, since Spain doesn't recognize dual citizenship with those countries like UK, US, they will not recognize the double taxation agreement. Therefore, your pension will start paying taxes in Spain. This is what they say. But I have interviewed immigration lawyers, and they say that this is not true. However, I have never met anyone in this situation. This is more like a conversation, what people say, but really have never met anyone in this situation. But apparently, you shouldn't be worried. Okay, this is not tax advice or legal advice. Please consult with a professional. But this is what I take from it. Okay. Now, some allowances for pensioners. Well, the general allowance is 5,500 euros for any age. Then for ages 65 to 74 is 6,700, and over 75 is 8,100 euros allowance. So you don't pay tax on that quantity, and you start paying taxes over that. Now, let's talk about taxation of American 401k and Roth IRA in Spain. 401k's taxation distributions that are taxed as general income, progressive rates from 19% to 47%. traditionally exempt from Modelo 720 of overseas assets reporting and wealth tax, but caution is advised due to evolving interpretations. We're going to talk about that. Roth IRA taxation, investment gains tax as income at progressive rates up to 30%. Okay. Must be reported on the Modelo 720 annually based on the accounts surrender value as of December 31st, and is subject to wealth tax potentially with rates varying by region. Okay. And circling back to declaring on Modelo 720 the 401k, recent rulings, really it's not rulings, it's consulta vinculante. This is an individual who has asked Hacienda, or the Spanish IRS, to state a binding statement. Yes, should I declare my my 401k in the 720? And Hacienda said, yes, you should. Okay, but Hacienda is not a judge. Okay, so it is not clear if this is something that is perfectly fitting the law. So, but it's important that you understand this is the consulta vinculante 129122 that you can find online and read it, and potentially use it to talk with your tax advisor just to make sure that you are in the correct side of things. Okay, so always seek professional advice to ensure compliance and avoid penalties. And if you want to read more content about this and watch videos, remember that you can find so much on Spainguru. Just select the financial or taxes tab in the blog, and there's so much information out there, so many guides out there that I highly recommend you checking out. Another question is, do I have to become a tax resident in order to renew my non-lucrative visa, right? And this is a very, very controversial thing, especially because the Reglamento de Extranjería, or the bylaw that regulates the main organic law for 2000, okay, has recently changed, and they added a minimum stay requirement of 183 days in order to renew your non-lucrative visa or any temporary visa. Within them, you have the non-lucrative visa. But the thing is, this is the situation. First of all, as we said, the immigration year is different than the tax year. Okay, tax year is calendar year, immigration year is natural year, first of all. So they don't necessarily need to perfectly overlap. Yes, especially when you arrive to Spain the first year and you stay the second year, right? Second, this minimum stay requirement is in a bylaw in the Reglamento de Extranjería, and there is a Supreme Court ruling that already deleted the previous minimum stay requirement for the renewals of these visas. So this one actually is not enforceable. I have asked this directly to Manero Externados, and she says this is absolutely not enforceable. This is something that the Congress included in the new Reglamento de Extranjería, but they know that the Supreme Court is against this, because the Supreme Court says that a minimum stay requirement for the renewals of temporary visas needs to be included in the higher hierarchy law. This is the organic law for 2000, and not in the bylaw, which is lower, okay, underneath by hierarchy of the main law. Therefore, this requirement is not enforceable, and therefore, the answer to this question, do I have to become a tax resident in order to renew my NLV, is no, you don't. Actually, it is an interesting strategy not to become to stay in Spain, but not having to become straight away a Spanish tax resident. Okay, of course, if you're planning to do this, go with professional experts that you can find on Spainguru.es, that they know exactly what they're doing, that they know, the law up and down, and also engage with tax advisors and make sure to develop a precise strategy for this, because you will be under the law. Of course, I'm not telling you to do anything illegal, but understand exactly what's going on, because there are many things at stake if you become a Spanish tax resident where maybe you didn't have to. So here's the video that I highly recommend you to watch. There's the QR code. Remember, I will send you a recording after we finish this. I will process the video, upload it to YouTube, and you can watch it again. And of course, for people watching on YouTube, please give it a like and subscribe to the channel. Now, here's a slide that tries to condense everything that we said into one single page. You can print it, maybe have it there next to you on the wall, just to remember about Spanish taxes. Of course, this is not everything, but probably the most important out there. So this is the Spanish taxes cheat sheet in 2025. First, tax residency in Spain, more than 183 days in a calendar year from January 1st to December 31st. They don't need to be consecutive. It doesn't matter immigration status or physical percent counts. Second, key tax obligations, Modelo 720 for overseas tax declarations, personal income tax, annual and quarterly if you're autónomo, regional wealth tax, national solidarity tax, taxes on the net value of your assets and rights that you hold. 3, special tax regime, Beckham law, pros and cons, pros 24% flat rate on income generated in Spain, no wealth tax, no 720 declarations. But if you make less than 55K income tax, maybe it's not worth the hassle. Taxation of pensions, US and UK nationals, there is double taxation agreements. Social security and private pensions are taxable. Government pensions may be exempt. Taxation of US investment accounts, 401ks, tax on general income, progressive rates up to 47%. Roth IRAs, investment gain tax up to 30%. There's a typo there. And Model 720 may be required for Roth IRAs and maybe for 401ks. Always check with tax advisors. Taxes for digital nomads, employees go in one way, contractors or autonomous go in another way, and the eligibility for Beckham law would be for employees and not for contractors or autonomous or 1099. And then additional taxes that we mentioned: inheritance and gift tax, property tax, EV, VAT for new build properties, capital gains tax, plusvalía municipal, transfer tax when you buy secondhand property. And I think I'm done with the list. And deadlines to remember: the overseas asset reporting 724 is March 31st, okay, for the previous year. Personal income tax on June 30th, quarterly based for autonomous. And also autonomous, something I didn't mention, you also have to declare your VAT, okay, for your Spanish customers. If they're outside of Spain, normally you wouldn't charge VAT, so you don't have anything to declare for your customers abroad, normally, okay, generally. Then there is the wealth tax, June 30th. You have the solidarity tax 1 month after, on July 31st. And of course, remember how Spainguru can help. You can find so many resources for free out there. Okay, join more webinars, the newsletter, YouTube channel, blog, the community, so much stuff going there on Spainguru. But also you can find professional experts like tax advisors, immigration experts, and so much more that I have personally vetted over the years. And this is another cheat sheet that contains the deadlines for the calendar, the tax calendar for Spain. Okay. Now, before going into the Q&A session, remember that you can always send me an email to hello@spainguru.es. I always answer my emails that I receive, and it makes me very happy to receive emails. And remember, join the Facebook groups, watch the YouTube videos, and join the newsletter. And if you haven't joined other webinars, remember that I have 6 free webinars on Spainguru that all of them are bi-weekly. So you can always join them and also receive the recording right afterwards. Remember that the content of this webinar is for information purposes only and is not tax or legal advice. Please consult with an experienced tax advisor. Okay, now let's go to the Q&A session. And if you have to leave earlier, make sure to leave a review on Trustpilot. On the top, you will see a green bar with a red button. It will redirect you to Trustpilot, and it only takes 5 seconds to leave a nice review there. That will help me a lot and will make my day even week if you leave one. Now, let's go to the questions. Nico Hutchinson, thanks for joining today. In the US, business get to take deductions for expenses. Is the same true when filing taxes in Spain? Yes. Yes, I personally deduct expenses for my business, right? So you have some revenue and then you have taxable income. Okay. Christina, but I'm not a tax advisor. I don't know if you're asking for like your US business specifically. So how are annuities taxed? I don't think they're taxed here. Thanks. I don't know how annuities are taxed. Unfortunately, I might not have fully understood this. Do employees in Spain pay more than those who are registered as autonomous? The thing is, employees, if you move as an employee in Spain, you will be paying your taxes in your origin country, okay, unless your company opens a local company, okay. Your company from abroad opens a local company, then your company will pay the taxes for you as an employee in Spain, okay. But otherwise, if you move with a certificate of courage, you will pay your local taxes in your company abroad, okay. And only if you become an autonomous in Spain, you will pay taxes to Spanish authorities, okay. Now, if you're a holder of a US passport, remember that you always have to file taxes in Spain. So if you happen to be paying taxes as a Spanish tax resident in Spain, and you can always credit them towards your payment of taxes in the US. If I purchase a home in Spain, is the purchase price of that home considered taxable worldwide asset? Yes. Yes, of course. It's an asset and it's in the world, okay? It happens to be in Spain. So of course, definitely you purchase a home in Spain, that's an asset that you need to declare for your wealth tax, potentially your solidarity tax. Okay. Of course, if you're over the threshold where you live. So remember that the wealth tax is regional tax. So if you buy 10 properties for $1 million each, you will have 10 million assets in Spain, and you will be paying solidarity tax because you're over the 3 million threshold. If my US assets are held in a trust, which my children are beneficiaries of, and I receive income from the trust, do I report the trust as a worldwide asset, or do I just report income from the trust? So I don't know. Trusts are something so specific to the US. And also, depending on which tax advisor you ask, you will get different answers. So I highly recommend you engaging with an advisor that understands how trusts work. Also, because there are different types, if I'm not wrong, in the States. And you need to understand and make sure that the Spanish tax authorities will consider your trust in a specific manner before filing your taxes in Spain. So it's important that you engage with an advisor. Okay, this is very, very, very specific about how US taxes are considered by Spanish authorities. Unfortunately, I don't know. I plan to register for Beckham Law. My concern is Social Security. I heard I can get a waiver here in the US, so my company won't pay Social Security and Medicare, but as a family. But a US family told me to pay Spain's Social Security because the healthcare is great. But under DMB, I have to purchase my own health insurance with no copay. So if you pay Social Security in Spain, okay, then you will have access to public healthcare. Therefore, in order to apply for the digital nomad visa, you will not need to purchase a private health insurance. Not saying it's a bad idea to have both, but as a requirement for applying for the digital nomad visa, if you go if you apply as an autonomo, let's say if you apply for the visa and you write a letter and statement saying like, I swear to become autonomo, that I will become autonomo if the visa is granted, okay, and you become autonomo, you start paying Social Security and you will get your access to public healthcare, okay, and therefore you don't need to get a private health insurance. How is the Modelo 720 different from Modelo 100? So Modelo 100 is income tax, right? So income tax. And the Modelo 720 is a form in which you disclose the net value of your assets and rights held abroad. So it's a complete different thing. The Modelo 100, you would pay on the 30th of June all your income that you generated worldwide as a Spanish tax resident, if you're a Spanish tax resident, for the previous year, okay? And you will have to pay. So this is important. And the 720 is a form in which you declare the value of your assets as of December 31st the previous year, and the deadline is March 31st. So very, very different things. What about the agreement between Spain and US? Do you only pay tax in one country? I heard that you have to pay at first in the US, but then you only pay tax in Spain based on the agreement. First of all, one of the general discussions or controversial stuff or frequently asked questions by Americans in Spain is that they're asking like, where should I pay taxes first? Okay, and the Spanish double taxation agreement doesn't say that. The Spain US doesn't say it. Okay? You need to pay where you're a Spanish tax resident. Okay, many people will recommend you doing so. Okay, to pay first where you are a tax resident, right? And therefore, most people will get an automatic extension from April 15th to June 15th, pay their taxes earlier in June, okay? And with that credit, you will file taxes in the US and you will not pay taxes because normally and generally, you will pay higher taxes in Spain. Therefore, you just file taxes in the US, but you don't pay anything, right? So this is the general situation, okay? So do you only pay tax in one country? Well, that depends, okay? If in the it depends, because you will, let's say it's a credit system. If you didn't pay enough tax, then you will have to pay the difference, okay? But what generally happens is that you pay enough tax in Spain for you to pay any tax in the US, okay? So this is the general answer to this question. I own a home in the US. Do I want to sell it in the US? I do not need to pay capital gains on it. Great. Would I still need to pay capital gains in Spain? Should I sell before I move? I would prefer to rent it out 1 year while in Spain and sell after I move. All right. So I have Spainguru, rent or sell. Rent or sell. First of all, I have here this article that might be interesting for you. This is rent versus sell. What should I do with your US home before moving to Spain? And basically, I have transformed a community conversation where people who have sold before leaving or people who are renting, still own property in the US, tell the pros and cons of doing those two options. There is no clear answer. It depends, of course. Both options, first of all, have their pros and cons. Okay, it's like having a property in the US while you're living in Spain. If you move to Spain, you become a Spanish tax resident, and you sell it after that, you will pay capital gains tax in Spain, right? You will also have to pay taxes on your property in the US. But the pros is that you will generate income, etc., etc. So basically, read this article for answering, or at least inspire you with what is best. Okay, about. Stop displaying. Wait a second. Well, I lost your question. Okay, display. That's one thing. So if you sell it, you can sell the property the same year in which you move. But remember, don't become a Spanish tax resident during the same year in which you move to Spain, right? Therefore, spend less than 183 days on a certain calendar year in order not to become a Spanish tax resident the same year in which you sell your property, right? This is one way to avoid the capital gains tax. Also, if you're over 65, I think, and you reinvest all your, and if it's your primary home, and you reinvest all the proceeds, all right, all your capital gains into a new property in Spain, potentially you can also mitigate or avoid the capital gains tax. But you have to be very, very meticulous and precise in order so that Spanish tax authorities understand that this is your case. The best way is to avoid it doing like, looking at the timing when you move to Spain and when you sell your property. But yeah, definitely there are pros about keeping your property in the States, generated passive income there, and or maybe if you come back to the States, you have if you have to come back to the States, having a property there. So yeah, this is more or less how that works. And I think I did make it till the end. I don't have any more questions. It's already a little over 1 p.m. So I hope that I did my best to answer your questions. Some of them, unfortunately, are too technical or don't feel comfortable giving you any comment on it, because I don't want this. I prefer that you engage with a professional tax advisor that looks into the specifics of those questions. So, so I really appreciate that you joined today. And I see one more question here. The Philippines have double taxation agreement with Spain, correct? If I have income tax withheld at source in the Philippines, can I declare this tax in Spain and obtain tax credits? To be honest, I don't know about the double taxation agreement. I'm not saying it doesn't exist, but I'm not familiar with this double taxation agreement. Most of my questions go around other countries, so I would educate myself a little bit more about this double taxation agreement between the Philippines and Spain. But if there is one, usually it's just to avoid double taxation, and normally you would credit whatever you paid in one country towards the payment to another country, if you still have to file taxes on the other country, because not all countries need to still file once you move away, once you became a tax resident in another jurisdiction. Okay, the USA passport holders are special because they still need to file taxes regardless of where they are in the world. Even if they have been outside of a country for 20 years, they still need to file. So therefore, they have to be very careful about their taxation obligations in the States. But I don't know if that is the case of the Philippines. Okay, so that would be my answer. And thank you so much for joining today. Please leave a review out there. If you watch the video, give it a like. It really helps Spainguru with the algorithm and others find this content. If you think the information that I shared today with you is useful in any way, send me an email to hello@spainguru.es. Join the Facebook groups and join the newsletter. All these are free resources. You can opt out anytime. And remember, the content of this webinar is for information purposes only, and it's not legal or tax advice. Thank you so much for joining today. I will soon send you the recording of this video. Take care and have a wonderful week. Bye-bye.